get the signal about the stream. Okay, good morning and welcome to the Office of Tax Appeals, also known as OTA. This is the appeal of Ventura, OTA case number 2008-6475. My name is Andrew Wong. I'm the lead administrative law judge, or ALJ, who will be conducting the oral hearing for this case. On today's panel, in addition to myself, we have Judges Lauren Katagihara and Josh Aldrich. Also present is our stenographer, Ms. Marcina Munguia. This hearing is being live streamed to the public, and a video recording will be made available on OTA's YouTube channel. Also, Ms. Munguia will report this hearing verbatim and prepare an official hearing transcript, which will be made available on OTA's website. To help Ms. Munguia make a clear record, I have 4 requests. Number 1, please speak slowly and clearly and directly into your microphone. Number 2, please do not speak over each other or interrupt when someone else is speaking. Number 3, please answer verbally or with words. Don't just nod your head or shake your head. And number 4, please mute your microphones when not speaking. If Ms. Munguia cannot hear, understand, or identify someone who is speaking, she has permission to interrupt the oral hearing at any time to get clarification. Speaking of clarification, I would like to clarify that this oral hearing is before OTA, which is a separate agency from the California Department of Tax and Fee Administration, or CDTFA. OTA is not a court, but is an independent appeals body and is staffed by tax experts and is independent of the state's tax agencies. As I noted earlier, I'm the lead ALJ for purposes of conducting this oral hearing, but my co-panelists and I are co-equal decision makers and may ask questions of either party during the hearing. Further, our panel of 3 ALJs will decide all the issues presented to us, and each of us will have an equal vote in making those decisions. All right, let's prepare to go on the record. All right, we're opening the record. This is the appeal of Ventura for the Office of Tax Appeals, OTA case number 2008-6475. Today is Wednesday, March 15th, 2023, and the time is 9:34 a.m. We are holding this hearing in person in Cerritos, California. I am lead administrative law judge Andrew Wong, and with me today are Judges Lauren Katagihara and Josh Aldrich. We are the panel hearing and deciding this case. Individuals representing the appellant, taxpayer, please identify yourself. Could you speak into the mic? I didn't quite hear you. You have to press the button that says push.
Oh, okay, I got it. Name's Raul Correga.
Okay, thank you, Mr. Correga. Individuals representing the respondent tax agency, CDTFA, please identify yourselves.
Randy Suazo, hearing representative, CDTFA.
Jason Parker, Chief of Headquarters Operations Bureau with CDTFA.
Kerry Huxall from CDTFA's Legal Division.
Thank you. We are considering 2 issues today. The first issue is whether the amount of unreported taxable sales should be reduced. And the second issue is whether appellant was negligent. Mr. Correga, is that correct?
That is correct.
Thank you. CDTFA, is that a correct statement of the 2 issues?
That's correct.
Thank you. Appellant has identified, okay, we'll go over exhibits now. Appellant has identified and submitted proposed exhibits 1 through 20 as evidence. Mr. Correga, you had no other exhibits, is that correct?
That is correct.
Okay. And CDTFA, did you have any objections to those proposed exhibits?
No objections.
Okay, thank you. Appellant's exhibits 1 through 20 will be admitted into the record as evidence. CDTFA has identified and submitted proposed exhibits A through F as evidence, and you have no other exhibits. Is that correct, CDTFA?
That is correct.
Okay. And Mr. Correga, did you have any objections to those proposed exhibits?
None.
Okay, thank you. CDTFA's exhibits A through F will be admitted into the record as evidence. And we'll go over witnesses next. Mr. Correga, you had no witnesses, is that correct?
That is correct.
Okay. And CDTFA, you also had no witnesses, is that correct?
That is correct.
Okay. It was anticipated that the oral hearing would take approximately 70 minutes, 7-0, as follows. Appellant's presentation would be 25 minutes, and then CDTFA will have 20 minutes, and then appellant will have the final word, the rebuttal and closing remarks, which would be 10 minutes, and then the ALJ questions and these introductions and whatnot would take about 15 minutes. So that's about 70 minutes. And then we're about to proceed with appellant's presentation. Mr. Pegrega, do you have any questions before proceeding?
None.
Okay. CDTFA, did you have any questions?
No questions.
Okay. Judge Aldrich, any question? Anything? Any
No
issues?
questions, thank you.
Judge Katagara?
No questions.
Okay. Sorry. Mr. Carrega, please proceed with your presentation. You have 25 minutes.
Thank you. I'd like to first start off and talk about a little bit about the business. Rolling Tires, it's a tire business. The small business located in Bellflower. They sell tires, but besides selling tires, they also fix tires, do installations, and many things that are related to the tire. The bulk of their business is mainly patching tires and fixing tires. That's their model. They sell tires at a very low price. It's very competitive. This is a very competitive industry. So their pricing model tends to be very close to cost. And they make their money through patching, installation, and mainly more labor intense. So that's the first thing about it. I'd like to first start off, and maybe if you have, I don't know if you have that in front of you, but I can speak on some of the schedules that were prepared during the audit that we found disturbing. I'd like to first start off with the schedule number 2. If you're following along, it's on the PowerPoint presentation. You would hit outline view, and then you would first hit view, and then you would hit outline view, and it gives you the numbers of the schedules that I presented. If you don't have that, I have a hard copy, but it's very difficult to read. I want to start off with what exactly is a shelf test. This whole audit is basically a shelf test, or that is the main thing of what's generating their proposed tax that my client, that they're saying my client owes the state. And the way the shelf test works is they you find out what a product. I'm sorry,
Mr.
Yes.
Craig, do you have the actual schedule number you're referring to?
Yes, it's Schedule 2.
Schedule 2. Do you know where it is in the exhibits?
It would be exhibit number 2.
Exhibit number 2. Okay, got it.
So if we hit number 2, and
Okay,
Now.
it's your appellant's exhibit number 2. Got it.
Yeah,
Thank
okay.
you.
so the shelf test, the way it works is you buy a tire. I'll give you an example. You buy a tire, or a tire costs you $1, and perhaps you sell it for $1.10. So you would have basically like 10% or whatever the difference between what you sell it for and what your cost is. So the higher the percentage, so if I would sell it $2, so then the shelf test would be a higher percentage, and they would calculate their tax based on that shelf test, as they call it. It's like a gross profit, so they're sort of making a tax based on the shelf test. And so how that shelf test is comprised of, I think, is very important, because that is what this whole meeting is about, the shelf test. And they're making the claim that this shelf test is 90% or whatever it is. So I want to talk a little bit about the shelf test. As we move on as to what the shelf test is and how it's generated, it's basically it takes the difference between the sales price and the cost. So those are the two main, two important elements that we need to look at to determine, or they have developed the shelf test to determine what the tax is owed. So I just wanted to just talk about the shelf test, and now that I think we have a little understanding of how it works, I want to proceed to the next schedule. All right. I'm going to the Schedule 3, which shows exactly the auditor's work paper as to how she came up with the shelf test. The auditor, the field auditor, we gave them all the records, all the sales invoices that they requested for the period, and they had them, they made copies, and did everything. There were many work papers that this auditor did, but one of the one that I'm looking at is this number 3, which she took out of all these sales invoices, she picked out 6. And one of my concerns was only 6, and then not only did she pick out 6 invoices, she altered the invoices so that she can compare a certain tire with that invoice, which would create a higher gross profit or shelf test. For example, the invoices show, okay, there's a tire that's, that the size is, let's just say 50. And the make could be Goodrich, could be Michelin, could be anything it wants, depending on what you sell. Well, this field auditor decided, well, I'm going to get this invoice, and I'm just going to say it's Michelin or it's this high-priced tire without necessarily matching the price or the product with the proper cost. So in effect, what she did is altered what I say is the invoice because, the tire is doesn't match. So if you have a tire that's, let's say, a high-quality tire as Michelin would be a different price than an import tire, and be great difference. But what this field auditor decided to do, and she says it in her work paper, she couldn't match it. She couldn't basically match which type of tire it was. She just said, no, it's going to be this one. And there was no basis for that. So what she did here is actually altered the invoice and present it as this is a true record because she could not find it or whatever reason she has in her work paper here. But that's just one of the things that she did to create a very high gross profit. She didn't mention anything about statistical sampling. I mean, if you have, 1,000 invoices and you only pick 6, and then you come up, and not only did she pick 6, but she actually handpicked those invoices and then altered them to create a very high gross markup. If we look at what the markup she came up with was almost 100%, which everyone down the road said was unacceptable, and everyone agreed to that. No, this is not correct. So that is one of the things I wanted to talk about. There's a Schedule 4, and it sort of shows the difference in tax. Let's see if we could bring this up. If you don't mind, I'm going to use my paper copy here. And what the Schedule 4 is, it basically talks about the difference in tax. And that's what Schedule 4 does. It's just basically differences in tax. But the main thing is that her gross profit was almost 100%. If we go to Schedule 5 and 6, I wanted to show just how many sales invoices were examined. And the purpose of that schedule is to show all the invoices that the field auditor had opportunity to look at. And from all these sales invoices, she only picked 6 besides altering them. There's much, so these are all the sales invoices that were included and given to the auditor. When we look at Schedule 7, this is basically labor and putting the tires on cars. There's balancing, valve stems, patching work, and all sorts of other things besides just the tire. As I go to Schedule 8, this talks about the gross sales, and they're claiming it's higher than the bank, what's been shown in the bank. But here it is.
Mr. Craig, in your exhibits, which document are you, which exhibit are you referring to?
I'm referring to just, right now, I think I refer to 8. I was just referring to 8, but I'm going to Exhibit 9.
So Exhibit 8 is talking about a taxable book markup calculation. It's a Schedule 12F. Is that what you were?
Let me check here. I'm going to put it on Zoom so I can see this.
We're having a little bit hard time tracking your references because the PowerPoint pages don't correspond to the exhibit pages, and the PowerPoint you provided, it's a little small, so it's hard for us to read.
Yes, I understand.
So that's, if you could refer maybe to the exhibits that you provided, those are easier for us to read and track what your argument.
Okay.
Thank
Let
you.
me go to Exhibit 9, and I'm going to, Exhibit 9, which would be number 9, and I'm going to zoom in this.
So Exhibit 9 is Schedule 12G. It's federal income tax returns.
Okay.
Is that correct?
That's it. E. I'm looking at 12E, markup calculation for 1Q based on the recorded taxable sales and the purchase provided for the Bellflower location.
Okay, that is your Exhibit 7.
Okay, I've got here 9. So it would, I guess maybe we're off 2 as to what you have. Is that fair to say?
It may be, because you provided your exhibits,
Yes.
and then afterwards you provided a PowerPoint.
Yes, the PowerPoint is the
Oh.
one I'm referring to.
Right, but for the rest of the PowerPoint, it's hard to read the documents. It might be better to refer to your exhibits that you provided.
Okay.
You provide 20 exhibits, and then I'm assuming those are replicated in your PowerPoint.
Yes.
But your PowerPoint, again, like I said, it's
Okay,
a little
yes.
bit hard to read.
Yes.
And so it might be better for you to reference your exhibits.
Okay.
Thank
I'll
you.
reference them by the number that the auditor has used.
Sure, yeah, that's
Is
fine.
that okay?
Thank you.
Okay. This is my 9. I believe it would be year 7. It's 12E.
Okay, these are also still your exhibits, though? They're
Yes,
not-
they're still
oh,
my exhibits.
yeah.
Just that it looks like we have a difference between the PowerPoint, and since the PowerPoint is a little difficult to read,
Yeah, these are all your materials.
and
so-
all my material up here is based on the PowerPoint.
Okay.
So I apologize if I go back, but everything's based on the PowerPoint here.
Okay.
So what I have here is 12E, and it talks about the purchases. And the claims there, they're claiming that they're missing purchases. And one of the things I want to mention is there were many schedules here that the auditor prepared, and one was, a break even, there was other schedules. But they always just went back to the shelf test. And they don't address other things from their schedules, like a company that's on a cash basis versus accrual basis. There'd be a much difference in if you're trying to do a shelf test properly. You have to do timing. You have to take into account many other things. There's inventory, there's shrinkage, there's other things. And the field auditor just did not just ignore there and just said, this can't be right. We got to do other testing. And they go back to the shelf test and come up with the gross profit. I want to go to the next schedule, which would be my 10. I believe it would be yours 8. And it talks about the taxable book markup calculation. And I just wanted to show how this markup calculation and what they did here. This would be Schedule 12F. And all it is the markup calculation. And the markup calculation talks about, cost of goods sold, reported taxable sale, and gross profit. I'm going to skip to another exhibit, exhibit number 12, which I believe would be year 10. And this is what was reported. This talks about what she received and all the different quarters that my client used and reported. And it just shows that, hey, there are records. One of the points I want to make here as I go through all these schedules is the auditor did examine our books and records. Our books and records were examined. And we have schedules that show that our books and records were examined. So that is one of the main keys I want to show. And the auditor actually did work to examine those records. But she doesn't use these records for her conclusion or doesn't use any of these records. She always goes back to the shelf test, which we talked about, how many the errors or the inappropriateness, as every party agreed, even opposing, agree that it's not appropriate. I want to these schedules I have mentioned here are sort of give you an insight as to how this audit went and the progress and what was done and everything what's happened. If we look at when we appeal to the appeals office, they sided with the state and saying, and they quoted so many different cases and so many different manuals, and we responded in my booklet here saying that these aren't relevant. I mean, she mentioned certain things, such as certain cases, the Riley case. She mentioned another case, McGinnis, and what I want to stress is to all these things that she mentioned, and I have it in one of the exhibits here. They had nothing to do with my assertion. Can the taxpayer falsify documents, or can they, when we have books and records? The McGinnis case and the other case, Riley, I'll talk a little bit about the McGinnis case.
I think you said, can the taxpayer falsify records? I think you mean
Change records?
CDTFA? Are you saying CDTFA?
Yes.
Not taxpayer, because
Yes,
taxpayers
yes.
are
That's my
your client.
I'm
Yeah.
sorry. Yes,
Okay. Just want to clarify that.
yes,
for the
that's
record.
correct. And then she basically ignored my assertion and just basically went with the state. But one of the cases, there's numerous cases, and I have the report here how I responded to her opinion. There was numerous things how I responded, and it's in the pamphlets or the books you have. So I just wanted to have that there for you so you can actually examine how the response and also some of the cases that she referred to. I mean, if we look at your last exhibits, I'll sort of skip a little bit here. And if we look at the last two exhibits, she mentions the case Riley and also the McGinnis, which I believe you would be very familiar with. But one of the points I want to make is with McGinnis, the person did not have any books or records. And she's saying, kind of referring to us that, you're like this McGinnis case where there was no books and records. But we have books and records, and the books and records are shown here.
Mr. Craig, I believe you're referring to Maganini versus
Yes.
Quint.
Yes.
Maganini,
Yes.
just for the record. Not
Yes.
McGinnis.
Yes. And the main thing is the courts decided that, there was no records, and so they could use an alternative method of calculating the tax. And that was the main thing of that case. And I'm saying we have books and records. There's no relationship here. Also, the business that she was referring to was a bar. I don't know if that makes any difference. And, it was a different type of business. But the main thing is, we have books and records, and we kept saying that throughout this whole thing. We have books and records, the books and records are here. And they just use cases that, well, cases that are not pertinent to our assertion. And so it looks pretty on paper. Oh, yeah, well, all these cases, we haven't violated any of these things. We have books and records, and I want to make that perfectly clear, that that's what we have. If we go to, after all this was done, and after all we submitted our paperwork, I hope if it's okay to use names, I mean, instead of referring to the state. But the final thing here, I'm going to say Larry Parker, after all these work papers, he didn't use any of this stuff. Everything was like thrown away. Everything that the field auditor, everything that was not used, was, not even our books and records were used. And what Larry Parker said, and I think probably was the right thing, is not to use any of this stuff. So what Larry Parker did is just use the national average for the shelf test. Everything that was done here, all the field auditors, everything we went was not used for the tax. Our books and records were not used. Nothing was used to calculate tax.
Sorry, Mr. Craig, when you say Larry Parker, are you referring to Jason Parker or?
I'm sorry,
The-
probably.
Okay.
The gentleman over there to
Okay,
the left.
That's Jason Parker.
Jason,
Just
sorry.
for the record, that's Jason Parker, not
Sorry, Mr. Parker.
Larry Parker. Please continue. You have about
Okay.
4 minutes.
Okay, so Mr. Jason Parker did not use anything. He just used a national average and just said, okay, well, this is inappropriate, or whatever his conclusion was. But nothing was used. Our books and records were not used. So what he did was use the national average. And I have in one of my schedules, which we don't need to talk about, but basically saying, hey, there's nothing wrong with the national average. But what's important is it's not the proper tax. National average would be appropriate if there's perhaps maybe fraud involved, or perhaps if there are no records, then Mr. Parker would have, we call in our profession, linkage, to say, okay, he has proper cause to use the national average. But we have books and records, and we keep saying that, but they keep ignoring our books and records and always go back to the shelf test. And then after the shelf test, well, that's all thrown out. Everything was thrown out, whatever the field auditor's done, and then just comes up with the national average. Well, by using a national average, that doesn't help my client, because my client is below the average. But if you look at the books and records, they're there, and our tax should be what we owe, not what a national average, is done. So I'm not going to conclude yet, but for this portion, since I only have a few minutes, I just want to stress some points again. First of all, we have books and records. Second of all, the books and records are adequate. One of the things say, oh, well, we can't do a shelf test. Well, there's a big difference between single accounting versus double entry accounting. When you do single entry accounting, you don't need there's no balance sheet. You just do, single entry accounting. And so when you're doing some analysis, it's different as opposed to double entry accounting. You only list the sales, and we have all the sales. The second point I want to make is we are here, we're willing, and what we owe, we will pay. But when, the books and records, they're not using them, they're just using a method, a national average, it's not appropriate. So I'll conclude with that for now, till my conclusion comes back. Thank you.
Thank you, Mr. Craig. You will have time at the end for rebuttal and closing remarks. Okay. Now I will turn to my co-panelists to see if they have any questions for appellant's counsel, appellant's representative, starting with Judge Aldrich.
Hi, this is Judge Aldrich. Welcome. I just had a couple of questions. So you made a point regarding the shelf test, and there was, I believe, 6 invoices used. And you were saying that they altered them, but when I was reading the auditor's notes, it says that they weren't able to find what the brand was, and so they reduced, I guess, the breadth of them by the size of the tire, to try to narrow it down, to make it more accurate. Are you saying that the CDTFA somehow changed the invoice or removed the brand name, or what exactly are you saying on the altered?
I'm saying that they put more in the invoice than what was there. So if the invoice said, one tire, $50, they said Bridgestone, $50. So they actually added to the invoice, altering the actual invoice to substantiate their shelf tests.
So, are you saying they actually made that change, or they made that assumption?
No, they made that change because they calculated saying that, okay, and even says it in her work paper that, I could not find this, so so I used this brand to do my calculation with these invoices.
And are there any examples of those invoices?
Yes, if we go to my Schedule 3,
Do you happen to know what exhibit that might be?
it would be my 3. It possibly could be yours. I'll tell you exactly in a second here. It'd be 12A.
Schedule 12A?
Yeah, her Schedule A. Let me see. It's on the comments. Yeah, number 3 on my book. So it would be 12A, and I have it highlighted as to the invoices.
What's the title of that
Okay,
schedule?
12A-2.
That's your Exhibit 2.
Yeah, it's her schedule. It's 12A-2. It's estimated markup percentage based on auditor's review of the purchase invoices. And then if we look here on that schedule, she highlights here, however, see there's always this however, the sale invoice did not reconcile the brand name of the tire. So she used, did not.
Right,
Yeah.
and that's quite distinct from saying that the tire was actually a Bridgestone or a Michelin, right? She's saying that the invoice didn't have a brand name on it. And are you saying that the invoices did have a brand name on it?
I'm saying she used a brand that she added to the invoice by using a brand that was not matching the invoice.
Okay, are there any examples of invoices that do
Because she
demonstrate
actually alternates
the brand?
Yeah, it's this work paper here. She just mentioned here that she used, however, yeah. And she has comments here on the back, I highlighted them, where differences were noted, the taxpayer recorded taxable are not reported by the city, no credit will be granted, blah, blah, blah. But it's to the right, and what I have that highlighted. So that's where she actually altered her gross profit, which in effect altered the invoice to support her gross profit or shelf test.
Okay, I think I understand your position.
Yes.
And
I'm saying she didn't actually go physically alter the actual invoice. She did it on the computer to support her self-test
But
by
there's-
saying there's a higher brand and not matching it to the lower brand.
But there's also no invoices in the evidence, or will I find invoices and evidence that show the brand name?
Maybe. We have, there's quite a few invoices. You find the size, you would find the size. You'd find other elements of the sent tire. Yes.
Okay. And so part of your argument is that the national average was used, and I believe that's found in CDTFA's Exhibit D as an attachment to the re-audit. But are there specific schedules that you want us to look at that disprove that national average that was used, or that it should be shower?
Yes, yes.
It should be lower, excuse me?
Yes, absolutely. I mean, we can look at her schedule, because she has a schedule that shows a break even. And she puts down, it's a schedule that shows, that I believe the California also shows, that shows like it's break even. Well, it shows negative. But you would probably calculate break even if you take into account other things, like cash basis versus accrual basis. It would give you a break even. It shows you, if you just look at it the way as the field auditor presents it, it shows negative. And they say, oh, it's negative, it's impossible, you can't use it. Well, wait a minute, you gotta, this isn't accrual accounting. This is cash basis. So you might have some differences. You have to take into account, when the purchases were made and then when the sales occur. But auditor did not do any of that stuff.
Okay.
They just showed the schedule.
So your position is that the schedule showing the negative markup is an accurate reflection of your client's records?
Absolutely.
Okay.
Yes, I'm showing that. Do we have books and records? That work paper needs more work. If you don't, it needs more work. But yes.
Okay. Thank you. At this time, I'm going to refer it back to Judge Wong.
Thank you. I'll turn to Judge Katagihara for any questions for appellant's representative.
I do have one question. So you're indicating that that CDTFA assigned a certain brand to these invoices that did not have brands listed on them. How do you know, or how does your client know that Bridgestone, for example, was not the appropriate brand for that invoice?
Probably would have to go back at the purchases and look at the listing. There would be work involved, but they would know eventually.
Did you provide any evidence that would show that the brands assigned were not correct?
We provide, yes, we did. We provided all the purchases.
Thank you.
Thank you. Let me just check my notes to see if I have any questions for appellant's representative. So, your client operated 3 locations, is that correct?
One location. This is the one location here.
There's one location.
Yeah, here, Bellflower.
Because reviewing the record, it seems like CDTFA was auditing 3 locations, Bellflower, Wilmington, and Linwood. And I know that there was some disagreement as to the scope of the audit or your representation.
Mm-hmm.
In the record, it indicated you were only hired to deal with one particular location, the Bellflower
Yes.
location, but
Yes.
it seems like CDTFA was auditing 3 locations.
Okay.
What was the disconnect there?
I think they incorporated, I'm not sure when that point was, but they incorporated, I think that one time they were, other management companies were running that.
I think in the record it said that the date of incorporation was after the
Okay,
period
okay.
being audited.
All right.
So I'm just curious of
Okay.
why you think that only one location is at issue here.
Well, this was their conclusion based on this location. All the work papers are from this location.
Did your client provide books and records for the other 2 locations?
They weren't, I believe the auditor did not request those, but we gave the auditor everything they wanted.
Okay. So, did your client have separate seller's permits for those other 2 locations, or were all these 3 locations under one seller's permit?
That I don't know as of right now. I have to look. I don't know.
Okay. Okay, those are all the questions I had for appellant at this time. We're going to turn it over to CDTFA for their presentation. You have 20 minutes. Please proceed.
Appellant is a sole proprietorship who operated 3 tire stores during the audit period. The Bellflower location operated for the entire audit period. The Wilmington location was added April 1st, 2016. The Linwood location was added on July 1st, 2016. The 2-year audit period is from January 1st, 2015 through December 31st, 2016. Records reviewed were federal income tax returns for 2015 and 2016. Bank statements, sales invoices for the Bellflower location for the audit period, and first quarter 2016 purchase invoices for the Bellflower location. Sales and purchase invoices were not provided for the Wilmington and Linwood locations. Reported gross sales of $538,000 include deductions of 1. Exempt labor for $310,000, and 2. Sales tax included for $18,000. Taxable sales of $210,000 has been reported. Exhibit E, page 45. Comparison of federal income tax returns to total sales and use tax returns reported, sales disclosed, no differences. Exhibit E, page 93. Analysis of bank deposits revealed that not all sales are deposited into the bank account, as reported sales exceeded bank deposits by over $200,000. Exhibit E, page 65. Reported taxable sales were compared to cost of goods sold per the federal income tax returns. Markups of negative 37.98% for 2015 and negative 42.54% for 2016 were computed. An overall negative 40.07% markup for the 2 years was revealed. Exhibit E, page 92. Sales invoices for the Bellflower location were transcribed for the entire audit period. Taxable sales invoices totaled $237,000. Reported taxable sales for this location were only $162,000. The recorded to reported difference of $85,000 was assessed. Exhibit E, page 54. Appellant did not provide sales invoices for the other locations. It should be noted that the exempt labor in the transcribed sales invoice amounts totaled only $31,000. Yet the appellant claimed $310,000 of exempt labor on the sales and use tax returns for the audit period. The difference computes to almost $280,000. Exhibit E, page 64. Due to the 1. Negative markups, 2. Differences between reported taxable sales and taxable sales invoices, 3. Discrepancies in reported exempt labor to exempt labor totals per sales invoices, and 4. No invoices being provided for the Wilmington and Linwood locations. The department used an alternative method to determine taxable sales. A shelf test was conducted using sales invoices from the first and second quarters of 2016 and purchase invoices for the first quarter of 2016. Sales invoices reviewed were handwritten and did not have essential data such as brand name and tire rating. Only the tire size was available to try and match the purchase invoices. Due to the lack of information, only 6 invoices could be matched to the applicable purchase invoices. The shelf test showed a 90.55% markup on tires, Exhibit E, page 52. The 90.55% markup factor was applied to cost of goods sold, and initial audited sales computed to over $665,000, Exhibit E, page 51. When compared to reported taxable sales of $210,000 and to the reported difference already assessed of $85,000, unreported taxable sales per markup method of over $372,000 was determined, Exhibit E, page 50. The audit was submitted with total additional measure in excess of $450,000, Exhibit E, page 34. And a notice of determination was issued for the applicable tax, Exhibit C, pages 15 and 16. In preparation for the Office of Tax Appeals hearing process, an analysis of the audit was conducted. Included in the analysis was a review of the tire industry website, CSImarket.com. CSImarket.com revealed industry average gross margin on sales of tires of 25.9% and 25.85% for 2015 and 2016, which is equivalent to a markup of 34.95% for 2015 and 34.86% for 2016. Exhibit D, page 29. The department considered it more reasonable, in this case, to use the industry average markup to apply to the appellant's cost of goods sold. The department applied the third-party industry average markup of 34.9% to the cost of goods sold, Exhibit D, page 27. As a result, total unreported taxable sales calculated to $262,000, which is a combination of $177,000 from the markup plus the $85,000 reported to recorded difference. Exhibit D, page 26. As stated earlier, appellant has claimed non-taxable labor of $310,000. Records support roughly $31,000 for the audit period based on the compilation of sales invoices. If these unsupported exemptions were disallowed, they would amount to $279,000. This further supports the department's assessment of unreported taxable sales. In regards to the penalty, an alternative method was used to compute the audited taxable sales. Percentage of error is over 100%. In essence, only half of the taxable sales have been recorded. Records were incomplete, as the other two locations were not provided. There was a negative markup that the taxpayers should have known that they were reporting not the correct amount of taxable sales. In addition, appellant has made baseless accusations of fraud and impropriety against the department employees working on this case during the audit and appeals process. Appellant has made these accusations against the auditor, the audit supervisor, the appeals conference holder, and the chief of headquarters operations. These claims are unsupported and absolutely false. They provide no basis for adjustments to liability. The appellant has not provided documentation that supports any further changes to the audit findings. Therefore, the department requests that the appellant's appeal be denied. This concludes my presentation. I'm available to answer any questions you may have.
Thank you, Mr. Suazo. I will now turn to my co-panelists for any questions for CDTFA, starting with Judge Aldrich.
Sorry, I'm getting a little bit of feedback. Okay. Hi, yes, this question is for CDTFA. So first I wanted to know the error ratio that you were referencing at the end, is that after the re-audit, or was that the error ratio established in the initial audit?
That's after the re-audit. It is on page on Exhibit D, page 27.
Thank you.
You have a 115 percentage of error in 2015, 2016 is 132, and the overall for the 2 years is 125.
Okay. And so, with respect to the cost of goods sold, could you tell me how that number was calculated?
Using the appellant's federal income tax returns.
So what they reported on their FITRs?
I believe so.
Okay.
It's also on Exhibit D, page 27.
And then with respect to the Exhibit 2 to appellants attached to Exhibit, or in Exhibit D, so attached to the re-audit, the CSI exhibit, could you tell me, is that a source document from CSI, or is that some sort of schedule that the department prepared?
When you're saying source document, you're saying, do you have a reference?
So Exhibit D,
Okay.
and then in Exhibit D.
But what page?
Yeah, one moment.
29.
Okay, hold on. Okay. I believe that is what we were able to pull off of the CSI Marketplace website. And then we computed the markup and the margin based on because they would have had the 23, if you look at the top ones where it says gross margin annual, I think that's what CSI provided. And then the 25.9 and the 34.95, are you following me?
Yeah.
Okay, that would be what we got it.
Okay.
So we averaged them for the whole year, for each year, and then we recomputed it to show a markup.
Okay, and those are national figures, but not necessarily like local or
No.
state figures.
No, but if it's competitive, it's going to be pretty much on the ballpark.
Okay.
Okay.
Thank you for those clarifications. I'm going to refer it back to Judge Wong.
Thank you. Judge Katagihara, do you have any questions for CDTFA?
No questions.
Okay. I also do not have any questions for CDTFA, so we will turn it back to appellant, Mr. Carrega, for your rebuttal and closing remarks.
Okay.
You have 10 minutes. I think you had 2 minutes from your previous presentation, so you have up to like 12 minutes.
Wow, okay. I didn't know we had carryovers.
Also, if you could also address the negligence penalty is also one of the issues. That's issue number 2, whether your appellant was negligent
Okay.
during your rebuttal and closing.
Okay,
Appreciate it. Thank you.
I'd like to first address the since it's on my mind. This is the first time this client has been audited, so I would say the negligence penalty should not apply. This is the first time, and also we don't agree, or we don't believe that what you're basing your tax on is appropriate. So-
Mr. Carrega, could you just address the panel? And
Oh, I'm sorry.
Not
Okay,
the
so that,
representatives directly. Thank
okay,
you.
we'll start with the negligent penalty. First time this client's been audited, so I think there's really shouldn't be a negligence penalty. But also, the tax isn't what they say it is. So if you take into account a lower tax, then the penalty would be lower. So we're saying, yeah, we don't agree with this negligence penalty, and for the first-time user, any penalty. I'd like to also address the 2 points that council mentioned about the other locations. If we look throughout this whole process, never were they mentioned, we want to see these other locations. It was just this location, from my understanding, and this was the field auditor never asked me for, or while this whole process was going on. So the other locations. And there's no work papers of the other locations that, that they did or present. So those are 2 things I want to locate. But I'd like to start out with my conclusion that this whole thing is about the gross profit. That's what it is. And every accusation they make, they just make it, but they don't show any work papers or anything to say, oh, well, this isn't appropriate. They show the negative work paper, but they don't do more to show that, hey, maybe this isn't correct. When you look at the profit, everything was 99%, which we all agree that that was not appropriate. Everyone, from start to finish, that is not appropriate, and it definitely should be. And it was obvious by what Mr. Parker did. He didn't use it, and then he did a re-audit. Well, where are the work papers of this re-audit? I mean, is that linkage to support his national average? As we keep saying, the books and records we have. You have them, you're looking at them. We presented them, they made copies. You know, and they're trying to make an argument that the books and records weren't supplied. They were supplied, and they have them to do. So this is all about this gross profit. That's all it is. And they're just using a national average when in reality they should not. The books and records are here and available. So that's my conclusion.
Thank you, Mr. Correga. Okay, so for the final time, I'll turn to my co-panelists to see if they have any final questions for either appellant or CDTFA, starting with Judge Aldrich.
No questions, thank you.
Judge Katagihara?
No questions, thank you.
Okay. Excuse me. I do have one question for Mr. Correga. You had mentioned that it was only Bellflower that was being audited, or there was some disagreement? Because I'm looking at the audit working papers.
Uh-huh.
This is, hang on. Let me find the exact. Okay, so this is page 99 of exhibit, I believe it is exhibit E.
Mm-hmm.
All right, let me just pull this up. This is CDTFA's records. And it looks like, so it's like activity log, kind of keeping track of what's going on in the audit. And it just records an exchange between yourself and the auditor talking about the scope of the audit. Let's see if I can pull it up. This is the entry dated, sorry, I'm having trouble with this. Oh, it's August 27th, 2018. It's a note for the audit. It's referring to you. It says, Mr. Craig also said that he was hired only for the Bellflower location, and that the records for the Wilmington and Linwood locations are other businesses, and that each business is separate and has its own management team and records at each location. So it seems to be implying that they asked you for the records for the Wilmington and Linwood location. He, referring to herself, said that the Bellflower state ID number has always been used for Bellflower, and that if other businesses have used Bellflower's ID, that it was from direction of the State Board of Equalization, which was what CDTFA was part of at the time, not the Bellflower business. He, referring to yourself, said that if auditor wishes to audit the other businesses to issue a demand letter for the place of business, explained to Mr. Correga, I think this is the auditor speaking, that the permit being audited has the sublocations referring to Wilmington and Linwood, and that the letter that was sent to the mailing address on file, which is the Bellflower location, but that the audit is for all sublocations under that permit. So it seems from the record that the scope of audit was for all three locations, and they had some communication with you about that, and you had a different take on that.
Okay.
I mean, so it seems like they did ask for records for all three locations.
They didn't issue a demand letter to that location, I don't believe.
But if all the three locations were under the same permit, wouldn't it, and they're auditing that business, wouldn't that include all three locations?
Possibly, yes. But where are they when this whole process? They never pursued that.
Okay. I had no further questions. This concludes the hearing. The record is closed and the case is submitted today. The judges will meet and decide the case based on the exhibits presented and admitted as evidence. We will send both parties our written decision no later than 100 days from today. I want to thank both parties for their time and presentations. This oral hearing is now adjourned, and we are breaking until 1 o'clock for the next hearing. Thank you.
Thank you.
Let's go off the record, please.